Hello and welcome to AI Market News by LM. Overnight, something huge dropped on the global markets. I'm talking about a bombshell forecast that has pretty much everyone asking the exact same question. All right, let's unpack this. This isn't just some random number pulled out of thin air. It's a serious warning from analysts over at UBS. And it's all tied to a very specific, high-stakes scenario. What happens if the oil supply disruptions we're seeing from the Iran conflict just keep going? So what on earth happened to trigger such a dramatic, frankly shocking shift in outlook? To really get it, we need to look at the market before and then after one pivotal moment. You know, it's wild how fast things can change. Just yesterday, the mood was completely different. We are in a total risk-on phase. What's that mean? Well, it means investors were feeling good, they were optimistic, buying up riskier stuff like stocks. We saw the S&P 500 close in the green, and crude oil prices were actually coming down. It seemed like there were real hopes for de-escalation in the Iran conflict. And then came President Trump's primetime address. It warned of fresh attacks and tied any ceasefire to reopening the Strait of Hormuz, basically pouring cold water on any hopes for a quick resolution. As various news commentary noted, that optimism just evaporated. The message was not what investors wanted to hear, and the selling started almost immediately. And that selling wasn't just in one corner of the market. Oh no, it created immediate ripple effects that spread across everything. The reaction was incredibly swift, painting a very clear picture of a market in full retreat. US equity futures just tumbled. The tech-heavy NASDAQ 100 really led the charge downwards, dropping a sharp 1.4%. And here it is. This number brilliantly illustrates the real reason for the panic. The price of WTI crude oil surged. I mean, look at that, over 7.6%, all on fears of a long, drawn-out conflict and a serious squeeze on supply. This sudden reversal completely flipped market sentiment on its head. A great way we can actually measure this is by using a tool called the Fear and Greed Index. It's pretty simple, really. It just tracks 7 key market signs to figure out if fear is making everyone too worried or if greed is making them a little too bold. Well, after that speech, there is absolutely no question which emotion is in the driver's seat. Sentiment shifted and shifted hard, away from all that recent optimism and went straight into fear territory. So, amidst this big global risk-off move, there's one currency pair that's right at the center of the storm, the US dollar versus the Japanese yen. As investors scrambled for safety, they started dumping riskier assets and fleeing to the world's #1 safe haven currency, the US dollar. This pushed the dollar higher against pretty much everything, and we saw the yen weaken right past that key 159 level. So, why the yen? Why is it so vulnerable right now? Well, it's kind of a perfect storm of pressures. First, you've got that global rush into the US dollar, which automatically pushes the yen down. Second, Japan has to import a ton of oil, so that massive price spike hits their economy particularly hard. On top of that, there was a government bond auction recently that didn't go so well, which got people worried about Japan's debt. And finally, all of this just puts the Bank of Japan in a really tough spot, with more and more pressure on them to maybe even raise interest rates. With everything being so volatile, all eyes are now glued to the upcoming economic data. I mean, this stuff could easily add even more fuel to the fire. Based on what we're seeing from investing.com, there is several key data points this week that could really move the markets. We'll be watching the US initial jobless claims for a read on the labor market, of course, along with the latest trade balance figures and any speeches from Fed members. Every little piece of this data is going to be scrutinized for clues on what happens next. And that brings us right back to where we started, that shocking forecast from UBS. It leaves us with a really critical question for the days ahead. With markets sitting on a knife's edge, is 175 a serious warning of what's to come, or is it a momentary overreaction to all this geopolitical fear? That's what we'll all be watching. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.